Hello and welcome to a quick update about the SPX, S&P 500 as we're heading into a new trading week. So very strong, the SPX at the moment, very strong. It turned around where it needed to, end of October. You will remember that we were expecting a rally on this channel down there around this low point in October. It was very much overextended to the downside. We were able to count a 5-wave move to the downside at the time in a bearish scenario, and in the bullish one we can count it as an ABC structure where the C wave is an ending diagonal. Just two ways of counting this. The orange count is the bullish one, the white count is the bearish one. What I didn't expect back then, even though we called a low and we called for a rally, it was a much more aggressive rally than I had anticipated, because normally what we wanted to see in the bearish count was a clear ABC structure, and also in the bullish count, at least some kind of a deeper pullback. There was never a deep pullback. So it just keeps going. It's also above micro support levels that we do share with our subscribers in the Patreon membership. You can find a link in the description. So as long as these relevant micro support levels are holding, we can just keep grinding higher. But what I really wanted to highlight here in this video is that we're really at a key pivot point. So it's now obviously very much extended to the upside, whereas the SPX was very much extended to the downside end of October. So it was very much oversold. We're now quite a bit overbought. I mean, on different time frames. It really depends on which time frame we're looking at. But also on the daily time frame, we're now just entering the overbought range. End of October, we were just entering the oversold range, below 30. So yeah, call it overbought. On the 4-hour, we are quite significantly overbought. It's actually the highest reading since here, June, yeah, middle of June. So again, that doesn't mean it has to stop, but it might mean that sort of we might grind a bit higher, okay, and then at some point we get those bearish divergences in, and that will result in another pullback. Anyway, what I wanted to make sure that you understand, there are two wave counts still. The white wave count, which is the bearish one and can really lead us into a long bear market, is, well, it will get invalidated in the next, let's say, within the next 100 points, because a break above the July high, which is at around 4,610 points, yeah, a break above this level will invalidate the direct bearish scenario. However, there is still some space. And yes, it has come down a little too high for this bearish count, which is the white one, which is basically a a corrective pullback rally, not pullback rally, a corrective rally. And it could do another 2%, but above that, it's invalidated. So that would be amazing, because then there is not, or the risk at least, of a direct pathway down in a in a third wave, yeah, that can lead us towards 3,500 points. That will be significantly reduced. Never say never, right? There's always a bear around the corner, but it will not be that crash setup, because at the moment we have a potential wave 1 to the downside. We have a wave 2 rally, even though it doesn't look very corrective. So the third wave down, if we now get an impulse down, it's going to be that third wave that can take us down to, I mean, we can actually measure that with Fibonacci levels, take that 5-wave move down, go to the high. I mean, it can take us to, if it moves down from here, 3,750, yeah, the 1.618 extension level. And then we should get a wave 4 and a wave 5. And bear in mind, they can always extend further. I mean, that's sort of just the ideal extension level, yeah. Whereas on the other hand, if we break above the July high, the orange count is likely going to play out. That would be wave 5 to the upside. But then as soon as we have that top in place, probably around 5,500, maybe stretch it to 6,000 points, it might finish off this larger degree third wave. And well, the bear market might start afterwards. It's just that we have a significant high in place here, it's either this third wave here, either it finished in December 21, or it's going to finish with the next high. So that's sort of what I'm not entirely sure about, and the price action doesn't make it very clear. It's going to be literally the next move down that's going to tell us the truth. It's always the first deep pullback. I wanted to have that pullback already. Market didn't give it to us. So what I'm essentially watching for in the orange wave count is something like this, just simplified. Basically here, A wave to the upside, B wave pullback, C wave rally. This would be ideal in the orange wave count, or even ABC, larger A wave, B, C. So why as an ABC? Well, it just has to do with the movement of the October lows. This can be counted as a diagonal structure to the upside in the orange wave count. We can even debate, did the wave 1 sit here or did it sit here? But that's a 3-wave move up. That's a 3-wave move up. And so the wave 5 also needs to be a 3-wave move up. But yeah, again, you know, it really depends now on the next move to the downside. If it's a corrective pullback, I would see that as a potential entry point for long trades. Whereas if we see an impulsive move down, which might even come close to or break the October low, well, that would put me definitely on alert for further decreasing prices. The third wave would also be a 5-wave move. So if we see a wave 1, see a wave 2, then this would be crash in a third of a third wave. We can even determine, basically with fib levels, we can determine the subwave. So if this is a third wave which is coming, I'm going to change the color in a minute, then it should unfold like this, okay, in a 5-wave move. So that also tells us where we will get some more clarity about all of this. Because if we see an impulse down in wave 1 here, yeah, that would put us on alert, basically on high alert that this is going to continue down. So essentially we need to see a corrective pullback. If it's impulsive, very, very risky. And we can, with Fibonacci extensions, determine where the wave 1 is likely going to finish there, wave 1 in wave 3. So if it started from here, then it should push us actually towards roughly 4,200. Okay, so anything below that would clearly bearish. Then we should get that corrective rally, and then the third of a third can take us down. Possibly even, we can specify that further as we have those subdivisions complete, but possibly towards 3,920 between that level and 3,750. Then we need to get a 4 and that 5th wave down. But that is a little bit premature. We first of all need to get a decision up there. And I think we should get some clarity this week or next week. Yeah, that was just a high level analysis of the SPX. In the on Discord for our Patreon members, we also go into the 5-minute charts, 30-minute charts, you know, sometimes even smaller intraday movements and so on. So check it out if you're interested. But yeah, hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And yeah, if you're interested in daily updates about the SPX and the ES futures, as well as regular updates about stocks, check out our stocks and S&P 500 service. We also cover intraday movements about the S&P and also share regular NASDAQ updates. So there's quite a bit of, helpful analysis included, hopefully. So yeah, check it out. There are also video updates. So have a great start to the week. Thank you very much. Bye-bye.